Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A fifth bearish black crow on Friday and a further close below the important 96 even level. The base of the market was on the October 2023 high at 93.79, whilst overhead we have three distinct congestions that are the September 23 high at 97.68, then congestion between 98.69 to 99.61, and that's containing the 50% Fibonacci line of the 2022 to 2025 move at 98.89, and a November 22 high at 99.61. Beyond this, we have a denser congestion, mainly dating from 2014 between 101.55 to 103.34, containing the September 2014 high at 103.34, and just above that, the dark blue neckline extension, which was in there, this congestion zone, but it's currently at 103.68, and that's of the March to April 2024 head and shoulders top. Now, further up, we have further 2014 base congestion, this time from July 2014 between 106.79 to 108.62, though how good this is, well, I am not so sure. However, the most important piece of overhead resistance is further up and is the bright red middle time, currently at 120.56 of the big 2020 to 2025 bullish shift pitchfork. This bright red tine is located just above a significant congestion area between 119.19 to 119.99. Now, looking at the bigger picture, we have a changeover gap last week between 97.22 to 102.71, which the market has only partially filled in. However, that gap lower triggered a triple top pattern formed between early March to early April. Thus, I laid out some potential targets below for this pattern of a primary target X down at 84.67 and a secondary hard to reach target X1 down at 72.87 zone. Do these targets below look feasible right now? No, but I still feel obliged to place them out there unless a greater pattern, such as a really big halfway hesitation, takes hold. It is as I said at the end of March, it all depends on the action at the bright red middle time overhead, which is currently at 120.56, of the really big bright red 2020 to 2025 shallowly bullish shift pitchfork. Now, so far today, a very significant gapping move higher, up all the way to test the dark blue March to April 2024 neckline, which you can just see about there for a head and shoulders top. Though prices have pulled back a considerable way after piercing the congestion from August 2024, we're back in between that. And that congestion is between 101.55 to 108.62. Now, today has seen some filling in of that original changeover gap from last week, and it's an important but. But the last three sessions of last week now sit as an island bottom, in many ways possibly counteracting the earlier triple top idea. And it all depends if today's gapping move higher is a throwback prior to a reinforcement of that original move lower or not. Spot gold. An indecisive spinning top pattern on Friday. After that was also actually a bearish dark cloud cover pattern, and that actually may be the more superior pattern after the previous session's bullish above the stomach pattern. Last week, prices were capped by the 50% Fibonacci line of the 2026 move at 48.50 and held up by the combination of the September 2025 to January 26 move at 46.03, and that's the 50% Fibonacci line of that, as well as the bright red middle time, currently at 45.79 of the big late January to late February bright red bearish shift pitch hawk. In there as well was and is the rising mauve medium moving average, currently 46.91. Further down we have a further pair of 50% Fibonacci lines of the October 25 to January 26 move at 44.35 and the May 25 to January 26 move at 44.20. Whilst overhead we now have the slowly heading lower green short medium moving average, currently 49.22. So far today, a gapping open lower, caught up in the Fibonacci based congestion between 46.75 to 47.41. The latter being the 50% Fibonacci line of the late October 25 to January 26 move, and seeing prices already filling in that gap and moving up towards Friday's close. Bitcoin, a bearish open and close Black Marubozu on Sunday. There was also day 3 in a 3-day bearish evening doji star pattern, the top side of which had been capped by both the descending green short medium moving average, currently 73.404, and the March 24 high at 73.779. The close yesterday was just below the 50% Fibonacci line of the November 22 to October 25 move at 70.929. Below now we have the November 21 high at 68.977, but more importantly the influential bright red neckline extension, currently at 68.303, of the significant August 21 to January 22 head and shoulders top. Whilst above we have the bright green neckline extension, currently at 74.812, of the small January based head and shoulders top pattern. In a bigger picture, the market is still moving along within the dark blue February to date bull channel, currently 66.074 to 77.320. This action still raises the question as to whether the shallow bull channel is a basing action or part of a 2026 based bearish halfway hesitation. There's no answer on that as yet, but I will take one further action. I had previously laid out in the bigger picture a very large October 25 to date bearish halfway hesitation. The primary and secondary targets for this pattern have already been achieved, leaving just a much harder to reach tertiary target X2 down in the 54,000 zone. I will retire this target X2 after this commentary, as if the market were going to reach this final target, then it should have done so by now, and that's the reason for it. So far today, well, not much either side of yesterday's close right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.